Hi, Brett. How are you doing today?
Gilbert, I'm great. How you doing?
Great. Been a bit of traveling, but have some success. Maybe for just to update the viewers, and for the new ones who are coming in, hasn't heard of Pasofino Gold before. Can you give us a brief overview about your company?
Yeah, absolutely. And thanks for having me on again. Yeah, Pasofino Gold, where we trade on the venture exchange under the ticker symbol VEIN, on the OTCQB EFRGF, and on the Frankfurt N07A. Trading range between 50 and 60 cents for the past kind of 6 months. We have a market cap of about 75 million and about 10 million in cash in the bank right now. We own 100% of the Dugbe Gold Project in Liberia, and the project is quite mature. It's been around for around 15 years. We have about 3.9 million ounces of gold in inventory, of which 2.7 million ounces of that is contained in a reserve, and a full feasibility study was done on the project in 2022. So we have very, very good visibility towards kind of what the economics are. We'll talk about that later in the show. And I think it's worthwhile to note that, we have over 1,400 square kilometers of land, and we've only explored around 10 or 11% of that land. So when you and I have talked previously about what makes a good project, yes, it's always about the people, but then you start to look at, is the project a good project? Is there blue sky? Is there upside? We certainly tick the blue sky upside box for future. But as we've also discussed, I see Pasofino as one of the most undervalued gold stocks on the market today. We're trading at around $19, $20 an ounce in inventory in the ground, whereas we are a very substantially advanced development project ready to go into project financing in 2026.
Okay, so let's talk through a few recent updates here since we last talked 6 months ago. You recently did a financing of $12 million. So why do you do that? And what were the investors or shareholders joining in this financing? Are there new people coming to the company?
Great question. I think when we last chatted, there was a number of hurdles that we had to go over through the Hummingbird parent company transaction, which triggered a few events underneath our shareholder rights plan. We exited that, and with a cooperation and support agreement with our major shareholder, and we put away a little bit of money in late May, early June. Now, that money was used for doing a gap analysis on the 2022 feasibility study, which was done, and we published the results of that on August 26th. And MineScope out of Perth, Australia, did all the lion's share of the work. And what it did, it laid out a roadmap and a timeline Gantt chart, along with the cost associated with updating the 2022 study to a bankable status. And I know we're not supposed to use the word bankable under NI 43-101, and the exchange doesn't like it, but I like to use it as an adjective which describes the state of readiness of our project. So we just did a $12 million non-brokered private placement, which you helped with, and thank you for that, and brought in some of your clients to that. And we are now going to be using those funds to go down that timeline, go down that roadmap that MineScope have laid for us. And that's going to be about 8 months of work. There will be some drilling, about 8,000 meters of drilling. There will be extensive met test work done. And all of these things are to reduce the variability, to reduce the volatility, because the resource model has to be something that can be mined to with very little variance. The met test work recoveries have to be to our process flow sheet with very little variability. And to me, that's what makes a really good bankable study. So we're going to be working on all that. Yes, we'll be looking at CapEx, OpEx, all-in sustaining costs, etc. Because let's face it, in 2022, when that study was done, it was post-COVID. Steel prices were 40% higher than they are today. Gold prices were 50% lower than they are today. So notwithstanding the gold price, there are quite a few things we think that not only need to be updated, but we think we can make better. We can optimize and actually deliver even better economic results than just sensitizing the old study to a new gold price.
So what's sort of the strategy now in terms of the timeline on the updating the feasibility study? So in terms of securing the project financing and then some of their ultimately mining license and things like that, what sort of timeline and strategy now?
So yeah, so in addition to all the technical work that we're going to be doing, kind of the drilling, the met test work, the engineering studies and trade-off studies required for the study, I will be starting project financing discussions fairly quickly. We have a reasonably good idea of what the capex is going to be. It's going to be around 400 million. It could be 420. I don't think it's going to be much less than 400, but we see it being around 400. And you can start project financing discussions with lenders with that degree of vagarity, knowing that when the study is done, that we can firm up kind of the hard numbers. But that's kind of what we're going to be looking at. Same with operating costs. The previous study used fairly conservative operating costs, in my view. It had an all-in sustaining cost of $1,005. We know that there will be some cost inflation to those numbers. We also are going to look to outsource our power generation, which will add on to our operating cost of about $100, maybe $120 per ounce. And also, we will be starting resource development drilling from day one of construction. So, because we'd like to keep in the oxide material for as long as possible, that's a completely separate discussion. But our all-in sustaining costs are going to be around $1,400 or less, is what we're thinking. So we can have those project financing discussions with lenders, and then once the study is done, we'll be firming that up.
You also mentioned a bit about the exploration, or will you be spending a bit of time and effort in allocating some funds or work being done in some of the exploration work?
Yeah, and I think the rationale behind it is quite simple. Our existing production profile is quite lumpy. Although the first 5 years we averaged 200,000 ounces a year, for 14 years we averaged 171,000 ounces, and that's a very strong production profile. But we think we can make it more consistently close or over 200,000 ounces by bringing in some near surface discoveries in and around Tucson and Dugbe F, whereby we can bring in some near surface oxide resources and transition material, which will augment our feed to the plant, increase recoveries given the metallurgy of the oxide material, and it'll give us better overall recoveries, or the highest degree of overall recoveries, by using traditional gravity crush grind CIL. So I think from that standpoint, that makes a lot of sense to us. And then we can evaluate in year 3 or maybe year 4 or sooner what a flotation or other forms of liberation we can look at in order to address the harder rock, the more sulfide material at depth at Tucson, which is, it's got a high work index. So flotation will actually help us peel off the first layer prior to going through crushing, grinding CIL. And I think that will, again, improve recoveries. But that's a separate feasibility study. And I think we're looking at this project as, what's it going to take in the first 3 to 5 years? And what does this look like? Improve the economics, improve recoveries, and production profile beyond year 5. And so I think that's how we're segmenting it. If we didn't do that second feasibility study in year 5 or year 3 of production, it would just mean that we have the same process flow for the whole life of mine. But we're thinking of this generationally. We're trying to keep this mine around for 25 or 30 years.
Pretty interesting insight there. Let's talk a bit about your team as you continue to move forward with your project. Besides yourself, do you have the team in order to do that, or do you need to add some new people down the road?
No, there's definitely going to be some capacity building in 2026. I'm just a little reluctant to start doing it just yet. We have brought on a couple of new people to be in Liberia, to be in the ground, to manage the drill program. Ian Brown has joined us, and he'll be managing the drill program. And we will be looking at bringing in some additional capacity short term on a consulting basis until we are positive that we are going to get through project financing. And I think around March of next year, I'll start to, really fill out the owners team. And I've done this 4 times before. I know how to build the proper capacity in Africa, in West Africa, and I have a lot of people that have worked with me in the past, both in the DRC, and both in Sierra Leone and in Burkina, whereby I can put together an owners team quite quickly. And proven guys who can proven execution on delivering projects. So I'm quite excited about bringing the team back together, and then we'll start and work on that probably in March of next year.
Great to hear. And so, in terms of final sort of discussion, let's talk about your share price, because you mentioned a bit how you're undervalued compared to your peers, of course, in the gold market. We saw that, 6 months ago. Now it's pretty steady, your share price, while others have gone up, on the rise since the gold price has been moving the last few months. Some of the gold peers, development companies have gone up. Can you explain why? What's the reason? Nobody still understand your story as well as you should want them to know?
Yeah, Gilbert, it's not for lack of trying and lack of marketing, because I have, as you know, I've done quite a bit of marketing over the last 4 months, and will continue to do more as we go forward. The odd analogy here is that we have a 51% shareholder, and it used to be Hummingbird Resources, and the market didn't care. Because they always thought Hummingbird was just going to buy out the minorities and then build the mine. When Hummingbird went into distress last year and was taken over by a bank, by Chorus Bank in West Africa, the market really didn't pick up on what that meant, potential dynamics there. We have a bank that lends project financing. We have a bank that has a private equity company that are building out a gold company. So we have a pretty strong strategic partner, and the market still hasn't really kind of reacted like I would have expected it to. Let's face it, gold was $2,300 this time last year, and we were trading at 80 cents. Gold's $4,200 today, and we're trading at 52 cents. So a complete inverse relationship to the gold price, complete inverse relationship to where we should be. And when you start to look at capital markets aside, when you start to look at fair market value for our inventory, reserves, in my experience over the past 10 years, gold companies that are operating, they tend to get $180 an ounce for a reserve ounce. We have 2.76 million ounces of reserves. So, that valuation alone is close to $500 million. The balance of measured and indicated we have would deliver another 40 million, and our 600,000 ounces of inferred would give us another 20 million. So we should be well north of a $500 million valuation today, and here we sit at 70 million. Now, why? I can't really answer that. Mind you, 80% of the stock is locked up between 5 parties, and we recognize there isn't a really strong free float. And the more people that get into the story that understand that, yes, we should be trading at 5 or 6 times multiple to where we are, I think what the market, when we get into construction, are going to start and look at this and move away from a valuation on inventory and start to think about this as a valuation on, multiples of free cash flow, which will be very close in the horizon. So I think, this has the potential, and I've talked to people about this in the past, this has the potential to do 30 or 40 times money. That's really the reality of it. Now, can other things happen along the way to suppress that? Sure. But, if we get it half right, that's still 20 times money. And if we get it half right again, it's still 10 times money. This should be comparing us to some of our peers who are in construction at this stage of development, who may be a year away from production, and we're 3 years away from production. They're trading in the billions of dollars, and we're trading at under $100 million. So there's just a bit of a disconnect, but hopefully the market will get it, and eventually people will realize this is the most undervalued gold stock in the market today.
Yeah, I think I guess you can say that you're in that unlucky spot at the almost like the bottom of the second phase in the Lassonde curve, because you're really finishing all the things you already have proven. Your project is going through that next stage of, as you said, once you have news about the closer to constructions and all these things coming along, people started to realize this is, for real, and it's coming
Yeah, for sure.
soon, and then your valuation will continue to go up there. So I think
And we'll be delivering, in addition to that, we'll be delivering, our ESIA permit, and we'll be steps away from application for our Class A mining license once our tech report's done. So those are also triggers that the market will say, yeah, you know what? Yeah, they're at a stage of development. That's great. Oh, now they've got their permitting. Next thing you know, they've got their license. The project will be completely de-risked.
Yeah, indeed. Thank you for your update here, Brad. Thank you for speaking with us here today.
Yeah, Gilbert, thanks for having me on again.
Yeah, let's talk until next time.